So no doubt it's been a challenging time for emerging markets, equities as well as currencies, the whole asset class, and that's happening because of what's had events in Turkey. From our side, what we are saying is that it's still very hard to predict where this is going to go. It's not easy days for Turkey, but for the rest of the emerging markets, definitely there could be a fallout in the form of sentiment, and that's already been impacted. Now, if sentiment continues to be negative, you could see further outflows, and that's what we are looking at very closely.
Okay, since you mentioned about more outflows, actually I was just coming to the dollar index, which is somewhere about 96, 96.5. Where do you see that topping out? Because even from the Indian markets, Medha, in the recent past, we've seen, because of dollar index going up, we've seen the fund flows also going down.
Yes, exactly, and that's what I meant. When you see outflows, and if this continues in favor of, say, developed markets from emerging markets, then it would be, forcing or even impacting active investors to go ahead and take a more cautious asset allocation stance. And when I say cautious, we've already been quite sort of cautious more on that front right from the beginning of this year, and we've tried to enhance the defensiveness of our portfolios. So, that could just mean that taking a defensive stance for the year going ahead.
Okay, so you are saying one should remain cautious going ahead with regard to equities. But tell
Absolutely.
us, Indian currency, Medha, that too is also at record low. But if I were to compare Indian rupee vis-a-vis the other emerging market currencies and also the equities for that matter, we've been resilient. What is your reading been with regard to the currency market and also the equities in India? And what sort of investment strategy you guys are adopting for India in the EM basket?
Yeah, so where we see India is definitely, within Asia, it's an important element of the Asian growth story. You've got China on the one hand, which has been impacted because of the trade issues with the US. You've got India, which is seen to be almost like a barbell approach to China. What we've seen with respect to Indian equities is that there's a lot of resilience from the domestic investor, and that's providing a flow. They have been net buyers. What we also see with respect to India is just the long-term fundamental story, which is still intact. Short-term, yes, we do need to see some more momentum when it comes to economic growth, corporate earnings, but you do have some long-term compounders. So it's been a very stock selection approach from our perspective, because let's not forget that valuations of Indian equities are not exactly the cheapest. In fact, what really stands out from a valuation perspective today is China versus India. So Indian equities are losing out when foreign investors look at the price that you pay for the growth ahead.
Point taken, Medha. Well, valuations definitely, if I were to look at it in the emerging market basket, it is on the higher side. So will it be right to assume in the pecking order in the EM basket, you guys prefer China first and then India?
Absolutely. In fact, we're looking at, we are seeing more bottom-up opportunity stocks that are looking good, which have been indiscriminately sold off in China. And we are focusing, our extra dollars on that side. We're also looking selectively at some of the smaller ASEAN markets, which have been sold off, and they've just been out of favor, very tough valuations. The story is turning for the better. So India does have some formidable competition there.
Well, if you look at China now, there is that cloud of uncertainty which exists in the markets globally because of the trade war fear between these two countries, US and China. Well, there's a meeting now which is lined up on August 23rd. Do you see any sort of resolution coming by? Because we've also seen Chinese yuan depreciating.
Yeah. So what, our view on the trade war is that it could be anybody's outcome. It's very hard. We don't think anyone knows how it's going to go, but it's likely to linger on. So it's a very negotiated outcome from both sides. There would be a war of words, and there'll be continuous monitoring of the situation. From a company or an equity or a sector perspective, the way we are looking at China is that, yes, there is a part of the economy that will be impacted as tariffs get set on Chinese goods. For example, auto components components, textiles, some of the technology hardware, the smaller companies. But when you look at the composition of MSCI China today, 95% of the companies are really a play on innovation, consumption, and that's really the new economy which is throwing up with all these opportunities. So yes, there is a sentiment impact, and that could continue, but from a long-term fundamental perspective, some of these stocks have just been sold down in line with the broad market and are trading at very attractive valuations.
Just hypothetically speaking, let's say if there is no resolution which comes out from the meeting now between both the countries, do you see that spillover effect of trade war in the other countries also?
To a certain extent, yes, but no. I mean, let's not forget that Asia within emerging markets is a different story. You have economies which are less vulnerable when it comes to global trade, the export side, and you have companies which are now more exposed to intra-Asian trade. So there will be winners and losers, and eventually it could very well turn out to be a zero-sum game.
Okay. Medha, we are heading into election season, be it Spain this year or India will too be heading into general elections next year. If one were to invest in Indian equities currently, you said the approach has to be cautious because the valuations are high compared to other markets. So which are the sectors that you guys are looking at?
So it's been very stock selective. Within that, we are seeing opportunities when it comes to some of the financial names which are privately managed. So the private banks still continue to look very attractive from a risk-reward perspective. And one can argue that valuations are high, but the long-term story is still intact. We like some of the consumer names. We like selectively cyclicals, but a handful of those. And right now we are just watching to see how the whole election story unfolds.
And what did you make of the earnings season from the Indian markets?
I think as expected, no, nothing surprising out there. We do need to see corporate earnings coming through, and that's going to be the catalyst not just for India but even for Asia as a whole, that it's really the strength of earnings recovery which will determine where these markets go ahead.
Do you foresee any sort of EPS growth for FY19? Because in the last 3 years we've almost been flattish.
Yeah, we are actually, we're not sort of looking at too much forecasting in the future. At this point in time, we are seeing some green shoots that are emerging. If those continue, yes, then there will be a positive upward trend to earnings growth. And that's how we always start off every fiscal year. And this year is no different.
Okay, but do you also agree that the easy money, which was to be made from the Indian market, that phase is over now?
Yes, it's a challenging environment, and I think it's also got to do mainly with the fact that valuation or the froth that built up, across the market, especially in the mid and the small cap space, that has still not completely been taken away. So when you look at India within an Asia ex-Japan strategy, it doesn't really stand out. So yes, the days of easy money are over. It is about stock selection.
Okay, so it has to be a stock-specific approach also when we also head into election season. Plus, do the macros vary you, by the way, Medha, because the trade deficit number that one saw for the month of July was somewhat, it did not go well with the market participants.
Yeah, it's been a bit of a challenging environment when it comes to the macro story. Things just get pushed by another quarter. We have seen some disruptive forces which are still playing out. But as I said, there are some green shoots that are emerging that we are seeing on the ground when we talk to companies. And from now on, we are really taking it from, every 6 months at a time and weighing each opportunity. I think at the end of the day, when it comes to India, yes, everybody is very familiar with the macro story, but it will be about the strength of the business models, the company business models, and individually how that plays out. And things take time in India. So for example, in Asia, when you say you invest over 18 to 24 months, the same cycle takes 3 to 4 years in India. So you have to be very patient.
And if one were to ask you about the downside risk that the Indian markets can face, do you think that will come because of global factors or because of domestic factors?
I think it's at this point in time, it looks like if there is a further sentiment downgrade, then we are heading into a complete risk-off scenario, and then all emerging markets, including India, would get impacted negatively.
All right, Medha, my last question. How are you reading the fund flow situation? Because we know that the Fed will be hiking more rates. So do you think now in the remainder of the year also fund allocation will be more towards developed markets like US and not emerging markets?
Yes, that's one thought that has come through from our investment team, and which is to say that if this Turkey situation unfolds further, sentiment gets impacted even further, and when you monitor the flows and if you see that trend towards further outflows, it would be in favor of developed markets, and that would mean that one needs to sort of adopt a more cautious asset allocation strategy.